Hi, this is Raghee Horner, and you've got a chart of the dollar-yen on the daily time frame here in front of you. Now, obviously, I'm not stating anything but the obvious when I tell you that the BOJ intervened. But what I want to walk through in this video is essentially how the timing of this worked. So, first of all, let me mention that, yeah, I was long, and let me mention second, I've been long since the 24th, and let me show you. Here's the daily Forex trading edge, and I bring this up because back on, I'm just scrolling through some of my recent updates. Okay, here we go. Back on the 24th, you can see here, I had discussed the test of 76, and that really was, that Monday really was when I put together the timing of, I think what all of us knew was going to be intervention, but there's got to be a level at which we feel that the BOJ is going to be forced to act. And I talked about the technical levels, I talked about the surrounding BOJ intervention expectations, and I think the expectation wasn't a far reach, because consider for a moment, just going to go back in time, what had happened to this downtrend. We started to consolidate, and the consolidation came from the fact that traders knew, I mean, look at all these wicks just hammering away at these lows around 76.50. Traders knew that that area between 76.50 and 76 is where you kind of nudge the sleeping giant awake, and price action basically, I mean, very easily here presented that in a way that was visually and very much a confirmation of the fact that traders are not willing to get short on this pair for fear that they'd be caught in this. So the line in the sand was pretty much drawn. Now you can take a look at this low back here. Okay, let's zoom in just a little bit more. And you can take a look at this low back here. And that wick went down and nailed 75.94, which put 76 in play, not only as a major psychological level, but as a level at which traders quickly retreated from for fear that they had gone too far. But really what happened is the longer the BOJ took to intervene, the longer they took to step in and create this event, the more emboldened the bears in the dollar-yen became, and they started to poke away at 76.50. They started to poke away at 76.20, and slowly they began to poke away at 76. Now 76, the major psychological level, I think was the level to watch, but then the BOJ still sat on their hands through all this. Now partly, I think that was due to the news that China was thinking about stepping in and buying those EFSF bonds, and I think the BOJ thought it'd be best just to kind of sit back and see how that played out, because the fact of the matter is, if that played out well, the BOJ may not have had to do anything, because in this risk environment, this risk appetite would have increased, and that naturally would have helped the safe haven problem that the yen has been experiencing, and traders would have probably, what the expectation would have been is probably sold yen in that risk appetite environment, okay? And this would have driven the pair higher all on its own. That never really manifested. No specifics came out of that expectation of China stepping in, and when that really didn't occur, I think the BOJ's hand was forced, and that's what we see finally happening. But 76 for me was the trigger. Now I sat through the push down to, I think the eventual low was 75, 65 or 75.59. I can't remember what the actual low was, but we went down into the mid 75s. And again, that was, for me, fine, because we never really accelerated in any way that caused me to believe that traders had created a resistance level at 76. There was still enough reason to think that prices were gravitating around that major psych level. So it was a little bit of heat. It was, I think, well within acceptable levels for a trade like this. I still feel that the BOJ intervention, again, once that China issue was pretty much solved, either we were going to get a big move higher based upon China stepping in and risk appetite stepping up, or we weren't. I don't know that traders were going to feel comfortable embracing 76 as a ceiling. So that was the trade. So again, what started with the 24th, and let me just show you which candle here was the 24th. That's the 24th right there. Sat through this, which was fine. Again, BOJ had to wait for the China story. And again, when nothing happened, their hands were forced, and we see what we see here now. But why was 76 the level? Price spelled it out for us. Aggressive traders could have done 76.50 or even 76.20, but this low here, established back in mid-August, I think was the level to watch, and that was that 76 level, which traders really just were not willing to get below. And I think once the BOJ saw prices start trading below 76, they thought, okay, these bears are really starting to feel their Wheaties. We got to step in and stomp on some traders here and create that short squeeze. And that's what they've done. Is this a trend shift? Look, this is the third intervention of the year, the second in what, the last 90 days? I don't feel this is anything more, and this is unilateral at that. I don't think this is anything more than that quick push up. Are we going to go down and test the historical lows again? That I don't know. But all the BOJ can hope to do, really, is just prevent traders from creating a ceiling at 76 and pushing lower from there. And I think that's the best scenario for the BOJ from here.